Hello, and welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So welcome to the session. Today, we'll be discussing the current market developments. And this will begin with the events that happened last week and over the weekend. And once we go through that, we check out the economic calendar, look at the key important events that might be happening in the markets this week. And once we are done with that, then we proceed to some technical analysis before we end the session. So before I make any progress, I would like to mention that this is not investment advice. Neither is it a recommendation to trade. So always do your own analysis and practice proper risk management. So if you can hear me clearly, kindly type hi in the live comment section. And this will confirm that everything is working just fine. Awesome. So among the key highlights or key events that we will be looking to observe in the markets this week, they are as follows. This is a data summary I made early in the day. So on the earnings calendar, there is quite a number of companies that will be reporting. So key highlights include the following companies, and that's McDonald's. We'll also be looking at Caterpillar earnings, Eli Lilly, AMGen, Walt Disney, S&P Global, Philip Morris, as well as ConocoPhillips. So majority of the earnings were reported last week, where we saw a mixed outcome of the tech sector. There are some companies reported better than expected earnings, while others missed, including Tesla. So we'll also be looking at a couple of inflation reports showing the level of inflation for the month of January. And these will be coming in from Turkey, China, Philippines, Brazil, as well as Mexico. So in terms of central banks making interest rate decisions, there will be a couple of central banks to focus on. One of the top highlights includes Australia. We'll also be looking at an interest rate decision from India, Thailand, as well as Poland. So on the economic reports front, we'll be expecting three major economic reports. So the first one is the ISM Services PMI from the US. This will be a good indicator of the services sector trends in the US, and it will be important for the Fed's decision. So we will be looking to understand the impact of this news in the markets. Then also we'll be having the New Zealand jobs report, and that's basically the unemployment rate, as well as the wage growth rate. Then lastly, we'll also be looking at the Canada's job report. So this week will be coupled with quite a good number of speeches, major central bank governors. So for the US Federal Reserve, there will be a number of speeches. First one will be from FOMC member Bostic, then Mester, Kugler, Balkin, as well as Bauman. So there will also be a speech from Central Bank Governor Mark Lem for the Bank of Canada. Then for the European Central Bank, we'll be having the speeches from Elderson, Lane, as well as Cipollon. For the Bank of England, we'll be getting a speech from Elman, and for the Reserve Bank of Australia, we're getting two speeches from members Bullock as well as Kohler. So as you can see, there's quite a number of speeches, and we expect this is going to have some impact in markets. So on the elections front, this is focusing on the geopolitical front. We know that the US is currently going through an election year. There's quite a good number of activities already happening. So as for national elections, we know that Nayib Bukele won the El Salvador's national elections yesterday. It was on Sunday. Then we'll have two other countries doing national elections this week. So this includes Azerbaijan on 7th, as well as Pakistan on 8th, as well as next week, we'll be having elections from Indonesia. So from the policies front, this is where we have various parliaments making various laws and regulations. The US Senate on Sunday unveiled a $118 billion bipartisan border security bill that would also provide aid to Ukraine as well as Israel following months of negotiations between Democrats and Republicans. So we know that there is a very strong opposition on this bill, especially coming in from former President Trump. So the voting on this bill will be happening on Wednesday. So that's when we'll know that whether the bill has been passed or not. So that will be a key highlight for the week. So on the economic calendar, if you go straight to Forex Factory, you'll notice that on Monday, it's usually a quiet day. Don't expect much to be happening in the markets. So we already started with the MI inflation gauge in Australia, up 3%, low impact news. ANZ commodity prices up 2%, at least the previous number of 2.4%. So we had a speech early in the morning at around 3 a.m. coming in from Fed Chair Jerome Powell. Then ANZ job advertisements coming in at 1.7%, which was a big rise from the previous reading of 0.6%. The goods trade balance in Australia came at 10.96 billion, which was much higher than expected, but slightly lower than the previous number. Then the Kaizen services PMI in China came in at 52.7, missed expectations as well as the previous number, which means that the services are still expanding, but not at the same rate as the previous month. So as we head on for the rest of the day, the Spanish services PMI, Italian, French, as well as German. And once we get all the data, get the full picture for the entire Eurozone. So final services PMI for the Eurozone will be coming in at midday. So later on, we look at the Centix Investor Confidence Survey in the Eurozone at 12:30. Before we look at final services PMI for the UK, producer price index data month over month for the Eurozone at 1 p.m. Then final services as well as ISM services PMI for the US at 5:45 p.m. and 6 p.m. Then from there, we get the first speech from the Monetary Policy Committee member Peel for the UK at 8:30 p.m. Then the first Fed member to speak, the second. We've already gone through the speech by Jerome Powell. So the second Fed member will be Bostic, who will be speaking at 10 p.m. before we get the loan officer survey from the US at 10 p.m. So tomorrow, early in the morning, we'll be expecting quite a number of things. One is job market data coming in from Japan, where we focus on average cash earnings. Then household spending data from Japan. This will be at 2:30 a.m. BRC retail sales monitor for the UK at 1 a.m. Then the interest rate decision by the Reserve Bank of Australia, where it's expected to hold interest rates level at 4.35%, same as the previous decision. So right after voting the interest rate decision, expecting to see the RBA rate statement, RBA monetary policy statement, and of course the Reserve Bank of Australia press conference. So this will be happening at 7:30 a.m. So just before the next episode of the market snapshot, we also be getting German factory orders data. Then we focus on construction PMI for the UK. So this week is largely quiet. We don't expect to get as much major impact news compared to last week, where we had a couple of big central bank decisions, big magnificent 7 stocks reporting earnings. We also had non-farm payrolls and so on. So this week is slightly more quiet than last week. So speaking about last week, we saw the non-farm payrolls numbers coming in very strong, meaning that the job market in the US is still currently very tight, and as a result, there was speculations that the Fed might consider holding interest rates higher for longer. That led to a very strong dollar in the markets. So following this morning's speech by Fed Chair Jerome Powell, he basically mentioned that This is the link to the interview. I'll be sharing this with you. So it's a 13-minute interview. You can listen to it in your free time. So Jerome Powell basically said that there's a strong likelihood that he might not consider hiking interest rates on the next Fed meeting, which will be happening on the 20th of March. So that means that possibility for rate cuts are happening in the first quarter of this year are off the window, which means that there's a slight chance that the first rate cut will be coming in on the second quarter of this year. And that basically continues the narrative of higher for longer, interest rates remaining higher for longer, which tends to be bullish for the US dollar. So hello, Levis. Hello, Howard. It's Joe in the house, Itao, as well as J Squad. Thank you guys for joining and thank you for your comments. So I've already shared the link on the live comment section to the Fed Chair Jerome Powell's interview earlier this morning. So he mentioned that the US economy is currently very strong, and the challenge that the US economy is facing is fiscal indiscipline. So while for the last 2 years, the Fed has been tightening policy, bringing interest rates from 0.1 all the way up to 5.5%, which basically represents the fastest rate hike in history. The administration, on the other hand, has been spending and expanding the government deficit. And he cited that as a problem with policy effectiveness. So he's not feeling like the US economy has had the desired impact from Fed's decisions. So that will be a key development for the day. But the key highlight or the key take home for traders is that there's a good likelihood that interest rates are not going down on the March meeting. So we've been following the CME 30-day Fed funds Fed watch tool, where we try to understand the possibility from the Fed funds futures for the central bank to either cut, hold, or raise interest rates. So at the beginning of the year, there was a strong possibility that the Fed would be cutting interest rates in March. So the probability of a rate cut down to 5.25% was around 70% at the beginning of the year. However, as we keep getting more data and speeches from the Fed Chair Jerome Powell, things have dramatically changed. These numbers moved from about 70% and in about 1 month dropped to 15.5%, whereas the probability of holding rates at the current level of between 5.25 and 5.50% has shot all the way up to 84.5%. So with this in mind, we know that we are expecting the dollar to continue strengthening. Then from the dollar index, you can see the big rally that happened last week, Friday. So today we are having some form of pullback, though I don't think this is very strong. But then it might help establish the potential for another momentum upwards, especially if the market was to retest this area. So this area was previously acting as the resistance level. And once broken, it is now support. And if the market was to pull back and retest this area, then we expect to see continuation along this trajectory upwards, having seen the dollar index kind of practice the same thing. So it made a good rally on the first week, then moved sideways for like 2 weeks, another good rally, then a sideways momentum for like 2 weeks. And now we have entered yet another bullish momentum. So expect the dollar index to continue being strong for the rest of the day, perhaps even for the week. So the big jump in the dollar also led big break in the USD JPY currency pair. So the market managed to rally and get to the previous resistance level around this area here, which was having as a high. The market struggled to break above that. However, from the price action we are seeing here, it's more like the market is consolidating in early morning trading. But then for the rest of the day, I expect the dollar to continue strengthening against the Japanese yen. So it's the same thing across board. So if you look at Euro USD, you notice how this market was attempting to break to our side. And we could be seeing the actual break happening this week the dollar continues gaining against the European currency. So as for the pound, I think this is our chart for the day. So after the market attempted several times to rally and break above this area, eventually it failed. And last week on Friday, there was a big drop followed by a break of this particular trend line. And now we have an expectation that the market will continue pushing further downwards. So with a strong dollar breaking below 1.26104, then the idea should be to target this other support area here, which is around 1.25014. So I expect that once the market breaks this area, then it makes a run for this particular support area. That potentially creates a good number of trading opportunities. So as for USD CAD, we had seen the dollar taking a step back against the Canadian dollar. But then from here, you can see how the market managed to make a big jump on Friday. And I expect this momentum to continue. So a good likelihood that the dollar will rally and get to the previous top, which is around 1.35352. So as for gold, it continues losing against the dollar. So after the big rally and getting to this resistance, there was an immediate change in the trend. And now we have a trend line that has been broken and the market retested this area before moving down lower. And now as we open the day, what we are seeing here is one of the markets that have the highest momentum in the markets today. So down 0.75%. I expect this momentum to continue. So a very nice and short-term target is 2017. But then if the market was close below this support area, then we go all the way down and target the $2004 price. So for AUD-USD, we had a breakout happening on Thursday. Market got back into the sideways momentum channel before breaking further downwards and forming a new low, which is lower than the previous low, indicating the strong bearish sentiment in AUD-USD currency pair. So in this case, I expect some further downside momentum. So if the market continues pushing further downwards for the day, then you might want to consider levels such as this one, a level that was previously acting as a support. Now the market is going back to the same area. So I expect to see some further slide down to 0.64509. So US equity indices, leaning with the NASDAQ, they made an impressive recovery on Thursday and Friday last week. So once they got to this previous high price, this was so close to an all-time high, and today we are looking to extend that. So it's something we had projected on Thursday and Friday, and today we expect some further momentum upside. So break be above Friday's high would mean that we are going for another all-time high, and investors are quite optimistic about it. So for US30 or the Dow Jones, also we had a top here representing an all-time high price. Even if you go to the weekly chart or even the monthly chart, then you'd realize that the market is trying to form a higher high or basically break into a new all-time high. So it's kind of a similar situation for the S&P 500. So having formed an all-time high last week, then this week I expect to see something similar. So as for Brent oil, we have seen the big deceleration from the previous high of $83.677 per barrel. So after the market found resistance here, there was a big sell-off for the entire week. And now as we start a new week, I believe that the momentum is still the same. Nothing has changed fundamentally, which means that this is still playable, that the market will continue dropping and eventually get to this area. So as for the French 40 index, it seems to be taking a step backwards. So after the big rally happening 2 weeks ago, last week was majorly bearish for the French 40 index. So this week, as we begin, it seems kind of scary to participate in such a market. But then if you monitor the movement, then you notice what's happening. So one of the key things that we use in trying to understand a trend is by connecting different highs with other highs. And also we connect the lows with the lows to try and understand where the markets might be headed. And clearly we have two trend lines here, but you have to be patient until they are broken. So for the Euro 50 cash index, it also seems like a similar thing. So we are seeing the market being constricted, and perhaps it's trying to set up for some form of reversal. So Bitcoin was expected to accelerate from here and get to $46,000. So this didn't play out. The market moved sideways for the better part of the week. And now as we start a new week, the dreams or the hopes of the market making a rally, getting 6K, then it would make sense to start looking for bullish positions here. So New Zealand USD making this sideways momentum here. So we don't know yet whether there will be a strong break or not. Then we continue monitoring the market to see what might happen. So with a very strong dollar, there's a good likelihood that, sorry. So this was it. Market that was trading in a channel eventually made a break on Thursday, put higher up. Notice that the high that we saw on Friday was lower than the previous high. And now seeing a big drop happening here, the market breaking the previous support and moving down lower only implies that the current pullback is potentially an entry area. The market makes a big drop, goes back for a while, and then continues in the original direction of the break, which is bearish momentum in this case. So the dollar trading against the Swiss franc managed to make a very strong comeback. So we can all see the rally that started here. So after the non-farm payrolls data, there was a big spike and the market continued pushing higher. And as for today, I expect some further upside. Of course, we could be seeing the high of the last 2 weeks. The high of the last 2 weeks was somewhere around here, 0.87277. So that is it. That is it for the day. Checking to see if there's any questions. So hello, Willibet, Big Panther, Brentwood Uduri. Thank you. Thank you for joining the session. Is it still normal that for 2.5 years, now that they have not achieved profit consistency? I don't know. It is not something I can generalize. For instance, if you have been putting only a small time in your day, let's say 1 hour per day, versus a person who is, let's say, trading full time, you would obviously have different results. So if you've been trading for 2 years and you have not yet achieved profit consistency, maybe it's time to take a step back, learn some more, focus on analyzing your previous trades, looking at your journal again to try and dig through and find out any mistakes you might be making in the market. So another comment from Apollo, and thank you, Stanley, for your question. Hello, RK. Analysis digging through job number says the huge numbers of masks some dwarf shadows where the numbers for those not looking for jobs has grown highest. So that is true. So while we look at the overall non-farm payrolls number as a report, we know that for the last 13 months consecutively, the Fed has always revised the non-farm payrolls downwards. And this has become a key trend indicating that there is a hidden weakness in the job market. And this basically leads to the reasoning we are seeing in the markets, where higher interest rates or interest rates staying higher for longer was previously expected to be extremely bearish for stocks. But then what we are seeing here is this data being reflected as by traders who continue buying the stock market. And as a result, we are seeing a very strong SP 500, NASDAQ, Dow Jones, Russell 2000, and so on. So already investors understand what's currently happening in the job market. So even though you see the report, it's very important to dig through and understand what the report actually presents and what it does not present. What of gold? I think we've already covered gold. We have done some analysis on gold and identified that it is in a very strong bearish momentum. There is a good likelihood to be getting a very short-term target at 2017 and a longer-term target of $2004 per ounce. So hello, Tony. If you are late, then you should know that these sessions are live and recorded live, meaning that once I end the session, it will be available for you to watch on your own demand. So a good question. What is your take on this coin called ACN coin? Honestly, and this is my personal opinion, not that FX Pesa. I think the coin is a scam. It doesn't have any value proposition. They are issuing security that is not properly licensed regulated. They don't have transparency, so it's not something you should concern yourself with. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. And that's tomorrow at exactly 11 a.m. So thank you very much, guys. See you then.